Yo, what's going on, everyone? This is Jimmy from Justice Trading. So we have a very bloody market with a gap down over the weekend. Right now, Sunday night. We're trying to prepare for the week ahead. So first thing, what I want to talk about is really the earnings that are coming up. So over here, what we have is Palantir, PayPal, AMD. Those are probably the big ones that I'm taking note of. Also, perhaps Uber, Eli Lilly, Amazon. Those are later in the week, and Affirm, but not too big of an earnings week as compared to our previous week with Tesla, Apple, some of those big names for the Mag 7, right? But these are some tickers to note. And then the only other thing I want to look at is over here on Market Watch. We want to see what red folder news that we have. So Monday we don't really have anything. Tuesday job openings, that's somewhat important. We'll expect some volatility at 10 a.m. on Tuesday. Other than that, we have some PMI and jobs claims later in the week. So not too big on the fundamentals and data-driven news in this week ahead. We had CPI or PCE just on Friday, and that was not too hot, so it wasn't too bad. So it's not too big of a catalyst going into the week. But what is a very big catalyst are the tariffs that the news is talking about. But on my side of things, right, usually tentacles fuel the move for a catalyst to really push direction, whether you're bullish or bearish. Right, I think tentacles really sets things up for fundamentals. A lot of the times, you'll see a technical pattern get played out only by utilizing a fundamental catalyst. So that's what we saw. I think most of the tariff news was already priced in, because that was a big point of discussion throughout the week. And then on overnight and over the weekend, we got actual news on the tariffs, which broke out the rising wedge that we saw on NQ. So let me just take a look at NQ to show you guys. Right, we had this slow grind up to fill the 4-hour gap that was left off by the DeepSeek news. And then once we filled the gap, we couldn't close above it. We on the lower time frames, like the 1 hour right here, right, we got an inverted fair value gap right here. So that broke, as well as the low resistance liquidity down here with this trend line. So that also broke. So really, this is a giant bear flag or rising wedge, whatever you want to call it. Either way, it's a bearish technical pattern. So I think that news just really sent it overboard. So now that has happened, let's take a look at some levels going into the week. Let's start with NQ. What I have here, I try to clean up the charts a bit because we're not too concerned with whatever's up top right now. If I go to our 4-hour, actually, if I start off my weekly, right, obviously we have that gap that we saw overnight. We have some really big liquidity pools down below. We have a 4-hour external range liquidity level, as well as the double bottom down here. So we have equal lows. So if I go back to a lower time frame, so let me go back to the 4-hour, right, we can see a little bit more clear that we have a lot of resting liquidity down here right below these levels. So I think the drawn liquidity is going to be lower. We could tap into this fair value gap at 20,500, or even lower, all the way down at close to 20,200 and below. We have some equal lows down here as well. But either way, what I would like to see, and this really goes to my A+ trading framework, that's going to be in the link in the description below. But if we do come up here and try to test this gap in the London or Asia session, right, I want to see and take a look to see which liquidity levels get taken out, whether the Asia highs or Asia lows get taken out by London, and then that will put a good framework as to what we will trade in the New York AM session, right? So we have Asia accumulate. So if I go to a very small time frame, our 15-minute, right, if we keep on continuing trading in this tight session, tight range between 21,160 and at the bottom 20,980, right, we will be in an accumulation phase. And then I would like to see what London does as to if it takes out the Asia highs or lows for manipulation, and then we will get our distribution phase during the New York AM session. So that's what I'm really looking forward to for New York coming up. But either way, I would like to see us tap into this gap that we saw today, and then look for a change in market structure, so a inverse fair value gap, and then get a retest of that to go lower towards this higher time frame drawn liquidity. So that's really it on NQ. So let's take a look real quick on ES. I think ES is a lot more cleaner and a lot more clear because we have a lot of resting orders down here all the way down at 57.98. I've been mentioning this level countless times in the past couple months or weeks, ever since I've seen this, right? So weekly is very, very clean, that we can see that our drawn liquidity is going to be very much lower. We never had too big of a fair value gap that was bullish on ES on the weekly time frame. And then if I go down to our 4-hour, we can see that we do have this 4-hour fair value gap that's being respected right now. If we trade through it and then we displace down and retest, right, I would like to see a rejection of this 4-hour fair value gap to invert it, and then we would head lower down to 57.98, because just look at this. This is very, very clean. We have so many wicks all resting down here below, which is a very, very big liquidity pool. And then even lower, we have even more, right? Down here, we have some wicks down back all the way from September, middle of September. So we'll see what we get. And then last thing is what these two are predicated on is really what our US 10Y indicator or our ticker is. So the United States 10-year Treasury yields, right? That's a very important metric to see if we're going to get a better return on your money, on cash, if you invest in government bonds. So usually your interest yields from government bonds are going to be inverse of your market, right? So if you have your two market, if you want to invest in stocks or even the indexes, and you're going to assume a 10% return on stocks, whereas the government US 10Y, your treasury bond yields are going to be higher. Usually you want to see if you're going to get a guaranteed rate of return of that 5% or higher on that's going to be guaranteed by the government, or would you get a higher return from government from stocks, right? So really, if you think it's safer to invest and put money into the government bonds giving you a higher yield, obviously you would transfer your equity, liquidity, and money all out of stocks into something safer and guaranteed. But if you have a low rate of return from investing in government bonds, right, then you would probably invest more in stocks. So that's where you have a fairly inverse relationship between the two. So that's how these two work. But just on technicals alone, if we take a look at the monthly, right, we have this equal highs up here back from 2006 and 2008, so it's very long ago. This is a monthly chart, but we're looking at this, we're in a bit of a bull flag, so I do expect a gap up tomorrow because of how the stocks are reacting. So now if I switch over from a monthly to a weekly, we can take a look over here. You can see that back in October we slept liquidity right down from this this higher low. We did not change our market structure, right? This is still in an uptrend. And also right now we are entering into a weekly fair value gap. So either way, because this this candlestick chart is on a weekly time frame and we're not open overnight, we don't see any kind of price action, but I do expect a gap up to, tomorrow morning when the market's open. So next target, really, we're going to target this 4.8% external range liquidity, and then we have 5.02% and then 5.25% as our next target. So to draw on liquidity for US 10Y, it's going to be higher. So we'll see how this acts and which liquidity levels hit. So that's all, everyone. If you like this kind of content, please like, comment, and subscribe, and I'll talk to you all during the week. Have a good week, y'all.